what you should do once you receive the audited financial statements of your company. In this short video, we will explain to you directors or business owners what you should do following review of the final set of the audited financial statements of your company. The first thing you need to pay attention to, besides the profitability of the company, the turnover, the income statement and the balance sheet, which your accountants will of course explain to you, is your balance with the company. Is it a debit balance or a credit balance? As explained in other videos, both balances carry and have tax implications at the personal level. If it's a debit balance, then it means an accrued interest might be taxed at your personal income tax return, or if it's a credit balance, this could hinder a request from the income tax office for a capital statement. These balances are very important. Please have a look at our other videos which explain their importance and their implications in detail. The second thing to observe following the review of the financial statements is to inquire your accountants whether there are any VAT issues with the company. So have a look at the VAT balance of the company at the year end and ensure, following verification or confirmation from your tax or accountants or auditors, that it is reasonable. In other words, that VAT amount shown in the financial statement is paid after 10 days or after a month, depending, and that you're comfortable that there are no issues with the VAT, because the VAT, as you all know, has the most severe penalty of 10% of the due amount plus interest and fines. The third thing to observe following the review of your financial statements is whether your corporation tax have been paid and whether the provisional taxes and the corporation tax are aligned and they make sense to you based on the final profitability of the company. The fourth thing to check is your dividends. Have you taken any dividends? If so, has a dividend tax been paid? And something to discuss with your auditors or your tax experts is whether those dividends or that director's current account balance should be netted off with the dividends at the year end so that it gets minimized. Some accountants call it director's current account, some others shareholders current account. More or less it's the same. So your auditors will verify whether a dividend should go against your debit or credit balance and reduce it or even make it zero. The fifth element, and the more straightforward element that you need to inquire with your auditors, is whether the relevant submissions took place or will take place, or request and confirmation when they do actually take place. These submissions are the tax return of the company, which is the IR4, the audited financial statements of the company to the registrar, which is called the HE32 form, and lastly, ensure that you keep a copy of the signed financial statement, maybe electronically or in hand or in paper format for your own records. Thanks for watching. Stay tuned. Let me know if you have any further queries or anything else which you'd like us to cover.